Hello, my friends, and welcome to this, the Safe News Analysis for Tuesday, February 2nd, 2016. Happy Groundhog's Day to you. We'll talk about that more in the future, but welcome once again as we present a program that really does try to cull down that 24/7 news cycle into 15 to 20 minutes of what you really need to know to build your path to personal wealth. We're going to talk about the geopolitical, the economic, and the financial news that matters most of all to you. And then we're going to recommend, of course, as always, that in addition to watching the news analysis, you spend just a minute with our professional investor segment and our Safe Insights and the Safe programs that are up on the website at safefinancial.org. Remember, we're a 501c3 program built to empower you with the knowledge you need to thrive and prosper in a very complicated century. I'm glad you're joining us. We have a lot to talk about tonight. There's a great deal that happened in the last week that is of direct relevance to you. So we're going to get started right away. But as you know, we begin each and every week with what we call our Rubber Meets the Road segment. So let's start right off and look where the rubber did meet the road for you. Well, my friends, where does the rubber meet the road? Where is the one news item each and every week that really does matter to you? You know, there's so much that goes on during the week, and you can look at elections, you can look at wars around the world, you can look at ISIS and the terrorism they cause, or you can try to find that one thing that really is going to impact how you make money. It's a little difficult to do, but we certainly give it our best. So each and every week I read everything from the Wall Street Journal, the New York Times, the Economist, Reuters, go down the list. And we try to find, well, what is that thing? What is that one piece of news that you really needed to know about this week? Well, sometimes we get the really serious items. Sometimes we get the more whimsical items. And this week, I'm pleased to say that of all the stuff we looked at, you know what might have mattered most? The fact that Punxsutawney Phil came out of his burrow and did not see his shadow, foretelling of an early spring. Now on Groundhog Day, every year we look to Punxsutawney Phil to give us his prognostication. Well, this year he forecast an early spring, and you say to yourself, "Well, Steve, that's kind of silly. Why does that really matter to me?" Let me explain it. A lot of U.S. economic growth in the first quarter is predicated on weather. Harsh weather keeps people indoors and they don't spend the kind of money they otherwise would. A mild winter is very good not just for spending, but it lowers fuel prices because the demand for fuel oil is down. Well, as Punxsutawney Phil, who's as good a forecaster as anybody, says we're going to have a mild winter with an early spring, it's hard not to look at him and say he is where the rubber met the road. It really will matter to you. So at any rate, we give our award this week to our little furry friend from Pennsylvania. And it is said a little whimsically, but it's important for you to know the weather really does affect the U.S. markets. It affects the U.S. economy in a big way. We've had a pretty mild January across the nation. I mean, we obviously had the winter blizzard that hit Washington, but outside of that, the nation's been pretty tame. That should lead to some better numbers coming in for January than we otherwise would expect. We'll have to wait and see. We've got ADP payroll numbers coming out tomorrow, Wednesday the 3rd, so we'll see if those numbers reflect the nice weather that we've had. But as we move into the geopolitical, there's an awful lot going on. I don't usually talk about the U.S. elections, but I'm going to spend a minute on there with you. I'm sure many of you watched the primaries that took place yesterday in the state of Iowa, the first primaries in that battle to win the presidency. On the Republican side, not a huge surprise, but a little bit of a surprise with Ted Cruz pulling out a fairly sizable victory over Donald Trump. Impressively, Marco Rubio came up a very close third. This shows that the Republican Party really is splitting down some interesting lines. Trump isn't as conservative as many Republicans would like. Now, does that mean he can cross over into some of the Democratic strongholds? I don't know. His negatives are awfully high. Now, his economic program is certainly one that looks to be very, very strong and beneficial to people, but we'll have to see if he's able to get that more promoted and be more about policy than personality. Cruz, coming clearly off the evangelical vote, the Tea Party vote, heads to New Hampshire, where Trump is very strong, and Rubio did get another breath of life. On the Democratic side, you had a coin toss, and this is a surprise between Hillary Clinton and Bernie Sanders. The number 3 guy, the former governor of Maryland, he didn't even register. But the interesting thing is this. Miss Clinton and Senator Sanders split the vote basically 50-50. But when it came down to electoral votes, Miss Clinton gets them all. I believe it's a winner-takes-all scenario. So while even on the popular vote they split, she's going to get the lion's share of the electoral votes. Not really a surprise. I think it's predicted by virtually everyone that barring any significant problems that come up from this FBI investigation, she will be the Democratic nominee. But it certainly made a good showing for Mr. Sanders, and I think people were surprised by that. Now, there was one statistic out of that I thought really shined above all. None of the election statistics surprised me that much. But they did a poll of the Democratic participants under 30, and fully 85% of them support Bernie Sanders. Now, you could look and say they're kind of going against the establishment candidate of Hillary Clinton, looking for a little bit more of a radical. We have a country that really is uneasy right now. But I think more than that, it shows that a vast majority of those young people don't understand economics. The programs that Bernie Sanders is putting forward will not build a middle class. They will not lift a lower class into a middle class. What they will do is stagnate everybody by draining more money out of the economy in terms of higher taxes, and it will not close this income gap. As we've seen in the last 8 years, the income gap has exploded under President Obama. That's not because he didn't have progressive policies. It's because the nature of how the economy is changing. Under a Sanders presidency, it would accelerate that even further, and we would see a further declining of the middle class and a separation of the lower and the middle classes. That's an economic reality. So I thought in the American campaign, as you look at its impact strategically on global markets, you're going to end up with either a Clinton-Trump or Clinton-Cruz fight. Hopefully that will bring a dialogue to the economy or to the country that affects the economy that's positive. We'll have to wait and see. Politics is no weak game. It's a hardball game, and there's a long way to go between now and the conventions. But we'll have to see what happens and continue to watch through New Hampshire and South Carolina and all of the others. Kind of looking more around the world, there was an interesting new agreement at a summit held by Israel, Crete, and Cyprus. This was a little bit of a change in geopolitical balances of power. Israel, as you know, has become isolated in many ways in the Middle East. They've always been that way. One of their historical ways out was to go north. They could go through Turkey or some of those countries. Well, Turkey has turned very much against them in the last many years, although that's shifting because of some of the Russian-Turkish conflict. But Israel went into Greece and Crete and had a summit talking about natural gas exchanges and much more economic relationship between those countries. Well, that was a surprise because Tsipras, who's the head of Greece, hasn't exactly been pro-Israeli, but I think he needs the economic boom that an Israeli relationship might just bring him. So we'll see, and we'll continue to watch. But it was interesting to see the Israelis reaching out into southern Europe, coming in to try to extend their trade relationships. And finally, in the geopolitical world, I want to talk about an article I read in Time magazine, and they listed their top 5 geopolitical concerns for 2016. I don't think there are any surprises here. You and I have talked for weeks and weeks about most of these issues, but I want to bring it to you because there's another organization who most of you know who would agree with some of what we say. These are big concerns, and there are things that can strategically hit your asset allocation and your investment policies and investment strategies. So pay attention to them. Number one, they talk about what they call the Hollow Alliance, and they're referring to Europe and NATO. Over the last 8 years, the relationship between North America and Europe has dramatically gotten worse. Russia and Europe have tried to come together. Russia's made very real moves to become more friendly with Europe. a lot of which flies in the face of the historical NATO agreements. Well, the United States, while that's been happening, has backed off its European relationships, opening them up to having those relationships with Moscow. So that hollow alliance becomes a real game changer as we see problems from immigration into Europe. We see problems in the Ukraine and in Finland with the Russian position. We see Turkey now virtually every week having air conflict with Russia. These are real issues. So Time magazine agrees that that NATO weak relationship from the U.S. to Europe is a number one geopolitical concern. The second thing they talked about is the possibility of a closed Europe. And what they're referring to there is much of Europe is responding to this immigration crisis by closing their borders. We saw it in Poland. We've seen it in other countries. Europe is becoming much more European-centric. If you look in Germany, Angela Merkel, who's the chancellor there, is very left-wing considering the immigration issue. She's not going to win another round. The hard right is coming out very pro-German, very pro-nationalist, really upset by this flood of immigration of people who don't know anything about European culture. They don't want to participate in European culture, and they don't want to assimilate into European culture. So Europe, in response to that, is beginning increasingly to close down immigration. Well, when you tie that to the NATO change going on, a much more closed Europe, that changes the balance of power throughout that part of the world. The third thing they talk about is what they refer to as the Chinese footprint. Now, you and I have talked at length about China's movements in the South China Sea and China extending its trade relationships around the world. China's making very real and aggressive moves to extend their coverage. Well, that's happening in South America, in the Middle East, and around the world. So Time's point is that Chinese footprint, expanding that globally, is the third item of geopolitical concern for 2016. The fourth thing they mention, of course, and this is no surprise, is ISIS and friends. ISIS is a horrible organization, as you well know. They believe in a very radicalized version of Islam, and they kill people who don't believe as they do. And they do it very visibly to scare other people into coming to agreement with them. They started in Syria out of the chaos created there by the attempt to overthrow Assad. They extended into Iraq, thus the Islamic State of Iraq and Syria. They are trying to recreate a caliphate in the Mideast where they think they are the responsible parties. Well, they're very radicalized even from the Islamic perspective. I'm not sure Saudi Arabia really wants anything to do with them. And that leads to the fifth issue, which is Saudi Arabia and its position in the Middle East. The Saudi kingdom has been largely isolated from radicalized problems until recently, with Iran now stepping up supporting ISIS and supporting terrorism around the world, and with a developed economy, a nuclear program, and $150 billion freshly minted dollars, Iran is quick becoming the more powerful nation in the Mideast. This is a conflict between Saudi Arabia and Iran, as Saudi Arabia has always been kind of the big guy there. Well, the oil war that you're seeing going on right now is partly reflective of that. Both of those nations are part of OPEC, the Organization of Petroleum Exporting Countries. Saudi Arabia is none too happy about Iran. They believe by forcing down the price of oil, they can hurt Iran. I'm just not sure they're right. Iran has a very developed economy and likely will be able to withstand this. But that is the fifth issue that geopolitically comes up, because any of those, which are hotspots, can come up to blow up and cause transitions in global markets. The second issue in the economic side is the Federal Reserve, where it's really lowered its sight on interest rates this year. It was just a couple of weeks ago, you and I sat here and we talked about the Fed hoping to get 4 increases in 2016, and that was before the January dismal market happened. Now, Fed boards of governors members are saying they're backing that off, wondering if they'll do any raises. Well, we know they'd like to get rates up. Most people in the economics world would like to see them get rates up. But the U.S. economy is just not responding strongly enough to give them the license to do it. Now, the jobs report comes out tomorrow for January, and we'll see if ADP's numbers would support another small quarter point increase. But right now, it looks like the Fed is going to sit tight for 2016. And then finally, economically, let's talk about the Chinese economy. This is clearly a major impact on U.S. companies, European companies, and consumers. Both sides of the supply-demand equation are affected. China came off what were supposedly double-digit growth numbers in the last many years, and they did it by stimulating through government spending. Well, that stimulus has now come to an end, and as they've settled down into a normal economy, a socialist economy like China can't compete. Its companies' incentives are not set up right. 40% of Chinese companies are owned by the state. In the United States, I think we have 6 state-owned enterprises. Out of the thousands of companies, 6 of them. 40% of Chinese companies are owned by the state. Those companies cannot compete with free market companies. And the Chinese are seen as a result of all this an economy that has slowed down to a crawl. The other issue is we don't really know how much China's growing. The numbers that are produced by the Chinese state are subject to games all kinds of ways. But China, if you look at their short-term impact, they're one of the reasons fuel prices have come so far down. The demand for fuel out of China has been very slim. We also know they're greatly increasing military spending. Again, the new military bases in the South China Sea, the new aircraft carriers they're building, all of these things cost money and drag on an economy. It looks for 2016 like the Chinese economy will not be the growth engine of Asia that it has been. And that ties in to the whole Japanese cut. It looks like the Japanese might be seeing that and reacting. Again, tomorrow, the 3rd, the Japanese release those minutes, and we'll see exactly what happens. Moving into the financial from the geopolitical and the economic, the number one financial impact in the last week has got to be this petrodollar issue. A lot of firms and financial assets are invested in oil, whether it's banks who make loans to drillers or private equity funds who make ownership interest in wells, sovereign funds from nations who are supporting their own industries. Well, this week, in addition to the pessimism that's kind of out there, a lot of these petrodollars flowed out of the stock market. The reason that happens is let's assume you're a private equity company and you have investments in the oil sector. Well, you may not want to sell that at its current low, but if you need to raise cash, you're going to sell out your other investments that may be carrying gains. So they're selling out of U.S. stocks, protecting those investments from causing them problems. That's been a real hit to the market. If you look at Tuesday's performance, it was driven by petrodollar selling. Now, that's a short-term thing. In fact, it may create buying opportunities for many people as they are forced out at lower prices than might otherwise be desirable for them. So don't ignore that as you look at your own strategy. This tumultuous nature, this volatility, is a good way to make money. And with that said, I urge you, as I do every week, to watch our Professional Investor Series. We're going to talk about how to make money in that volatile market with you, because each and every week, we're talking where the rubber really does meet the road. The second financial thing is going to this bearish environment developing. There was an article today in The Guardian or one of the magazines about George Soros coming out and saying this looks to him like 2008. No, it doesn't. Economically, we're nothing like 2008. Yes, the government debt problem's a problem, but that's a longer-term drain off the economy. We don't have the kind of bubbles built that 2008 were based on. In my opinion, Soros is saying it to scare people to sell assets so he can pick them up on the cheap. That would be consistent with what he did in England when he collapsed their currency and what he's done around the world. He creates this enormous negativism around something, then fuels the selling by pulling out some of his money. Then when the bottom collapses, he buys it all cheap. I would urge you not to listen to the perma bears, these people who come out and say it's all over. There was another article, this is my third item, but it ties to it. There was an article that said 2016 is a, quote, cocktail of risk. Okay, you and I've talked about the geopolitical issues that could affect the market. We've talked about the economic issues. As you look at the financial things that affect your investments, gold, silver, commodities, bonds, stocks, the first thing we always tell you is use your head, not your emotions. These perma bears are going to try to scare you so you sell your stuff when you shouldn't. All right? Take the emotion out of it. All of the investors that the society's worked with are told time and time again, use discipline in your processes, use risk controls in your processes, and do things so that this emotion in the marketplace won't hurt you. It's very dangerous to be letting yourself subject to the prognostications of people like George Soros. I guarantee you what he's doing privately does not mimic what he's telling you to do. Don't forget, in 2007 and 8, Goldman Sachs was selling people mortgage backs. At the same time, internally, they were shorting them. So the fact that the Soros and companies tell you it's bad, it may just be akin to Mr. Potter in It's a Wonderful Life, trying to exploit everything you have. So as we look geopolitically, economic, and financial over the last week, that's what we've got. Again, the economy continues to kind of mutter along. It's not doing great. It's structurally not doing poorly. American companies are doing okay. But we'll see valuation shifts as people get one fear or another. So as you're investing, make sure your disciplines are tightly in place, your risk controls are in place. And if you have an advisor and you haven't asked him yet what his risk control policy is, please do so. And if you need help finding an advisor, as always, write me at steve@safefinancial.org. We'll put you into one of the advisors we consider to be SAFE certified. I appreciate your joining us once again this week. We'll be back next week. In the interim, any day you have questions, please write us, steve@safefinancial.org. Give us a call at 630-923-5008, and we'll make sure that you get the answers you need. So until next week, have a safe, happy, and prosperous week ahead.